All right, the markets are waiting to hear from the Federal Reserve today, wrapping up a two-day meeting. Not expected necessarily to cut rates today, even though there are some that, who are actually advocating that, but to sort of lay the path toward a September rate cut. Ruchir Sharma joins us, the New York Times best-selling author, What Went Wrong with Capitalism, part of a series of when he looks at nations and what defines them. Increasingly, what defines us right now is a lot of spending and all of that stuff that kind of joins with our European colleagues. Having said that, though, Ruchir, it's always good to have you back. Let me get your take, first of all, on what difference it would make one way or the other if the Federal Reserve were to join other European central banks and start cutting rates.
Well, I think, Neil, I'm not sure it's going to make such a big difference because I think that the structure of the economy has changed. One of the big mysteries that has still not been fully solved is that why did so much of Fed tightening over the last couple of years not have a bigger impact on the economy? And that's because a lot of the borrowing and lending that is done in America now is done with much longer duration. So any changes in short-term interest rates take a lot longer to have a real impact on the economy. So yes, I think that the markets are getting a bit excited because they always do in terms of the moment they see the prospect of easy money. But in general, I think the structure of the American economy has changed where it, on the upside, if interest rates did not have much of an impact on the economy because of a couple of reasons. One, as I mentioned, that the duration of lending and borrowing has become long-term. And two, because the Fed had pumped so much liquidity into the economy post the pandemic that we are still, I think, suffering from the liquidity hangover. We are still mopping up that excess liquidity out there. And so therefore, I think any short-term changes in interest rates is unlikely to have a bigger impact on the economy.
Well, it certainly won't have a big impact on our spending. And you recently wrote an interesting piece in the Financial Times where you addressed this sort of gluttony. You didn't call it that, but you did say that right now, in the coming years, the U.S. is on track to replace Europe as the land of even bigger government and slower growth. Now, did you say, were you meaning to say that's going to happen regardless of whether it's Joe Biden in the White House, Kamala Harris in the White House, Donald Trump in the White House, that it is just this constant giant force that has taken over?
Yeah, no, but I do feel that there are lots of problems with American capitalism. And what I've tried to do in my new book, which you sort of spoke about, is that what needs to be done for a new administration to get American capitalism competitive again. To compare it to Europe, as I did in that piece, to me is like, okay, Europe's a lot worse because it has zero productivity growth. But America's productivity growth has also been declining due to a lack of dynamism. And that lack of dynamism has been coming because the role of government in our lives, in the economy, has been growing steadily for the last few decades. It's not just spending, it's the suite of government habits, the culture of bailouts, the amount of regulation. And what I do sort of mention in the book is that, at least on regulation, Trump's track record is not as good as he advertises it to be, but is better than any precedent that we have seen. And under Biden, the kind of regulatory growth that we saw, I think has been stifling for small and mid-sized businesses, and explains why Trump remains much more popular with that cohort. Because remember, regulation by definition helps big business and hurts small and mid-sized business who are less able to afford it. And also regulation is something which can be captured by the lobbyists in Washington, by the big businesses to write regulation in their favor. And it's the small and mid-sized businesses who suffer and get at the wrong end of it.
And it cuts costs for businesses, as you pointed out here. So the two are sort of joined at the hip. Real quickly then, if Donald Trump does make it back to the White House, of course, that's what he's promised again, to cut regulations, cut taxes, keep the tax cut thing going and extend them. Could that be inflationary, though, in this country? Some fear it would be, one way or the other. What do you think?
Well, I think cutting regulation is not inflationary. But yes, at this point in time, the number one priority for a new administration has to be that how do you get this deficit under control? Because we can't keep running deficits of 6 to 7% of GDP, and that too in peacetime. What happens if we have a downturn, recession, or even a war? Because those kind of deficits have historically been seen only in those environments. So the number one thing to make sure that inflation remains stable. It's to get government spending under control. And I think the agenda for the new right, something which I'd love to speak to you about at some point, but I've covered extensively in my book, the agenda for the new right needs to be that what can you do within a capitalist framework to break from the past old style conservatism and yet operate in a way which is popular. So I think that more deregulation, no bailouts, and how do you make property prices affordable again? I think these are some of the top agendas of a new administration and something that a possible Trump government needs to think about, apart from the very hard decision of to doing something about spending, because that really is out of control.
Yeah, the right or the left each make their own mistakes. So we'll see how they would change under a Donald Trump here, and as we've been seeing it play out in Europe. Ruchir, thank you very much. Always good seeing you.
Thanks, Neil. Enjoyed that.